Hello, everyone. We're going to start briefly. So, if you could please take a seat and make sure to fill out the shares on the front, please. Well, hello, everyone, and welcome to Pitch at the Hive FinTech Edition. My name is Solange Rijo. I'm part of the Ignite team, and today I'm very glad to be your host for the day. This event is all about bringing founders, investors, and all the startup community together. So, thank you so much for spending your Friday here with Ignite. Today, we'll be hearing from very exciting fintech startups who are changing the way we think about money, how we send it, how we spend it, and how we access it. Before we get started, I would love to introduce our esteemed panelists and investors. From Brink.io, we have Yasin Abu Daoud. From Rust Capital, we have Sharjil Ahmed. And from Antler, we have Said Al Borshed. So please welcome them and thank you so much for being here with us today. Today, I'm happy to announce I will be doing something a little bit different that we've never done before at Pitch at the Hive. One of our investors and panelists from Bring.io offer a prize worth $5,000 to the best pitch startup that presents here today. That package or prize will include a full access to our investor community, a one-on-one video interview for LinkedIn, and social media exposure across all their channels. I'm very excited to see the pitches, hear the pitches, and see who takes the prize home. Before we dive into the startups and founders, I would like to remind to our founders that each one of you will have 10 minutes to present and there will be a hard stop. Someone from our team at Ignite will signal once the time is up. I would also like to remind our panelists that you need to speak loud and clear. At the end of every piece, you get a chance to ask questions. We won't open that stage for questions. Only the panelists will ask the questions after the startups. However, we will have a networking session at the very end, and you are more than welcome to engage with the founders, the panelists, and ask your questions then. All right, sounds good? Okay. Introducing our first founder is Usman Conde, CEO of Wondi. Give it up for Usman. Apologies for that. The first startup will be Chris Hughes, founder of Cinder. Give it up for Chris.
Hello. Hi. Hi, everyone. I'm Chris. Do we have a clicker? Thank you. I'm Chris. For the past decade, I've worked in some of the largest fintechs in the world. Firstly, Revolut in London, and then Tamara in the UAE. Today, I'm here because I think there's an enormous opportunity in the Gulf. The problem? The Gulf is stuck with white-labeled, high-fee, and frankly outdated financial products. We all know the hassle. High travel FX fees and poor user experience, either in the app or even in person. The opportunity, though, is clear. The UAE is hungry for innovation. Regulators are encouraging fintechs and startups, and we want to be part of that leap forward. In short, I see a gap. The Gulf deserves a card that's built for them, not an all-in-one import. That's why we created Cinder. So if we look at the market, the UAE is particularly interesting. The Gulf in general has the highest travel spend per traveler per trip in the world. The UAE has the highest spend, has the second highest spend for a country. So if we look specifically at the white collar segment, which makes up about 50% of the UAE population, this is a significant untapped opportunity. The key is that over the last 5 years, most fintechs have targeted the blue collar segment. So this leaves the white collar segment underserved. That's where we want to position ourselves, to take advantage of this opportunity to create a tailored travel fintech focused product that services that white collar segment. Introducing the Cinder card. We've partnered with some of the biggest names in fintech and in the region to deliver a single dirham debit card, platinum debit card experience with simple zero FX fees, full digital onboarding, Sharia compliance, medical insurance, as well as other benefits. In addition to this, one of our core values at Cinder is design. Whether it's designing great products or great technology, we want to deliver a 10x better experience for our users for 10 times less cost, whilst wrapped up in a fantastic package. So why is Cinder unique? There are lots of fintechs. There are lots of banks. Our main competitors in the market today are Al Ansari, HSBC, Emirates FBD, WEO. But what all of these have in common is that they still charge hidden FX fees. They still have multi-currency wallet complexity. And most of them still have a terrible user experience. This is where Cinder comes in. We deliver a single currency streamlined experience with transparent, very low fees or zero fees, and we wrap it up in a great user experience. So where are we at? Well, because of our business setup with our partner bank Roya as an outsourced technology provider, we have no licensing requirements to launch. Over the past couple of months, we've been working on the MVP build, and we should be looking to pilot this MVP at the end of September. We'll then be looking to launch to the wider market at the end of October, and at the same time, looking to launch our eSIM MVP as well. After that, we'll be looking at a regional expansion and looking to solve further payments and travel pain points. The question is, how could we possibly achieve all of this? And how can we get an edge over our partners, over our competitors, sorry? Well, the technology that's available to us now is step function better than the technology that was available to our competitors when they were building. This enables us to create and iterate on technology exponentially faster than anyone else has been able to do before. As a result, we can build much better at a much higher quality, much more quickly. For all of our waitlist joiners, we're launching a limited edition Founders Card. This card comes with completely free FX until the middle of November, fully digital onboarding through UAE Pass, medical insurance, fulfill visa assistance, discounts, and an FX markup calculator to emphasize the travel use case. We want to reward our early believers and early joiners to Cinder with these perks. As for our team, we've assembled a world-class team of FinTech experts. With the founding team with roots in Revolut and Tomorrow, and our advisor team from some of the biggest names in FinTech globally. Giants such as PayPal, Binance, Weo, and PayTabs. We think we've assembled a world-class team that's able to execute on this vision and build and scale FinTech success. So far, we've raised $300,000 from FinTech founders, regional prominent investors, and international backers that believe in our vision. This is enough to launch us and give us enough runway until the end of the year. In closing, Cinder's mission is to make the global citizen experience as seamless as possible. And with that, thank you very much for listening, and I open the floor to questions.
First of all, thanks a lot for the pitch. Couple questions. So you mentioned Revolut, right? So what happens when they get their license? You know, they've applied, I believe, in March for an EMI license. What does that look like?
Yes, so I think this is interesting. So what has typically been the case with a lot of other international fintechs applying for their SVF or EMI license is that for disruptive international fintechs, it takes a much longer time to get licensed. So what we've typically seen with other fintechs like Ripple is that the licensing process can take between 18 months and even 3 years. Revolut applied for their license towards the end of last year, so it's coming up to about 12 months. I think Revolut has a lot of confidence that they will get their license quicker, but my experience with the central bank is that they'll take their time. But importantly, for Cinder, there are two things. One is that we're building specifically for localization. So as I mentioned, Cinder is Sharia compliant. This is particularly important for this region, not just from a consumer point of view, but also from a regulatory point of view. If you want to expand into the Saudi markets, to work with SAMA, you need to be Sharia compliant. So we think this gives us a specific edge over a Revolut, for example. In addition to that, our model, our outsourced technology provider model, which is similar to the Chime model in the US, allows us to build and test at a much more accelerated rate than if we were licensed. This means that we can spin up new products, and at a time when the creation of technology is commoditized by new technology, we believe that we can deliver a better experience and more products faster than Revolut would be able to.
Okay, awesome. And I'll get one more question before I hand it to the other panelists. Speaking about this localization, right? If you go back to the market sizing, can you just walk me through what those figures actually represent? So TAM, SOM.
Sure. So the SOM is essentially built from the fact that average travel spend per traveler per trip in the UAE is around about $8,000 a year. We're targeting the white collar segment, which is about 50% of the population. So we have $8,000, an average FX fee, because the way that our card is structured is we have a similar model to Revolut, which is based on an allowance. So during the week, within your allowance, we don't charge you anything. If you go above your allowance, then we start to charge you 1% or 1.5%. You can increase your allowances with our subscription. So this SOM is built off the back of that FX fee, scaled up for that spend. So that $8,000 is actually across everyone in the UAE. So we're targeting specifically the white collar segment. and scaling it up to the whole of the UAE, and then the TAM. So this is SAM UAE. SOM UAE. SAM is the wider Gulf, and then TAM is expanding into the MENA region and globally. Specifically targeting that travel spend, that travel card spend market segment.
Okay, so the SOM is the FX fees that you guys will be getting on UAE travel.
Yes.
Okay, got it. That's it from my side.
Very much. Thank you, Chris. Very interesting, especially that market segment which you are focusing. I'm slightly confused, right?
Sure.
So you have mentioned you don't need a license, but at the same time you are comparing yourself with Al Ansari Exchange, HSBC, Vio, Revolut potentially. So how you are different from them, and what problem are you solving?
Sure. So,
which they are not solving.
So how we're different. So as I mentioned before, we have a very similar setup to Chime. So we have a licensed financial institution partner through Royal Bank and also Network International. And these partners allow us to provide debit accounts, debit cards, and all of the services around these financial services. So from a user point of view, they see exactly the same experience as they would have at a bank. But the benefit for us is that the licensing process, and this is certainly the case in the UAE and is the case across the rest of the Gulf, licensing takes a long time. And it can be very subject to your setup as a business, your integration into the community, all of these sorts of things. And licensing can take a long time. So this is one of the biggest blockers for a lot of these fintechs, is speed and time to market. And the greatest contributing factor is the licensing piece. If we don't need licensing, we can deliver much more quickly new products, new experiences, and iterate and learn from those experiences in a way that it would take Al Ansari, Revolut a lot more time, right? In addition to that, I think one of the key differences is that we're building Cinder in the same with the same thesis that companies like Replit, Lovable, some of these international AI, $100 million ARR companies are building their teams. We think that we can build a competitive fintech team off a headcount of 20 people rather than 1,000 people. And we genuinely believe this. So this is the key difference.
So you do need license. At some point, you do need license. So you are at the moment using third-party arrangements, right?
Yes, yeah. So we basically lent the license as a service almost. But
and is the model acceptable in the region? Because I haven't seen much. Is it?
Yeah. So Roya will be submitting a letter of no objection to the. It's not even a letter of no objection. It's just an okay from the central bank. So we're a co-branded card. So in the back end, we are Roya Bank, but on the front end, the user sees Cinder and our products and our services. So this means that we don't have to handle money. We don't have to have a custody account. Any of these things.
All right. Okay. Just a last question. Sharia compliance, which is very near to my heart. That's what I do.
Sure.
How you are Sharia compliant? What exactly you meant by Sharia compliance in your products?
Absolutely. So for the Cinder card, Roya Bank is a Sharia compliant community bank, right? So as we're offering Roya product verbatim, the underlying card is Sharia compliant. There's no interest. People don't earn interest on their debit account. We don't charge any interest. These things are very important and are what we are trying to orient around to try and create that localization.
All right. Okay. Perfect. I do have some suggestions, but let me ask other panelists to ask questions.
Thank you very much. The gist that I got from the pitch and what you're presenting is speed.
Yep.
And I guess quality. and obviously the access you have to this sister bank. Um, I can agree with definitely what you're saying with the team that you have there, but what makes you and your team so much better that if I'm at Emirates MBD, I see Cinder's doing A, B, and C, I can literally build a team in 20 days and sorry, but just do what you're doing.
Yeah, sure. I think there are a couple of things actually. So firstly, personally, I've spent the last 10 years working for some of the most innovative financial technology and fintechs in the world. My time at Revolut, you know, we were empowered to build our own technology, right? There's that taking that autonomy and learning how to really orient around users and build quickly and learn was key to Revolut's methodology. And I bring that with me. So um, the benefits, the benefit of the way that we're building the company to be very, very low headcount means that you're not wasting time on approvals, right? There's no there's no hierarchy of approvals in getting design approved or getting products approved. We can just go and build, right? If there's only 5 of us that need to make decisions, we talk to each other and we build. We don't need weeks and weeks of meetings, right? Um, in addition to that, the cost of building and spinning up new technology has been commoditized, right? So in 20 minutes, if I have a new product idea, I could spin it up on Lovable or Replit and have a functioning prototype that I can start to tweak and make sure the user experience is perfect. Then I guess what we've developed at Cinder is taking that a step forward and productionizing that approach, right? This is actually where, you know, lots of enterprises are talking about AI and using AI. I don't think that there are that many enterprises that really know how to make best use of frontier products that can really speed up delivery. We pretty much built the MVP Cinder application in 2 weeks, and that's maybe 100 screens, full integration, full integrated backend with 3 or 4 partners, right? It's now for the people that have used these tools, and we've been using these tools now for about a year. So, you know, after leaving my last job at Tamara, I spent all of my time messing around with these tools and realized I could build some amazing things. So this is the opportunity. This is what makes us different. We can think of an idea, we can see an opportunity in the market, and we can act on that information and deliver a fully realized product within the space of maybe a couple of weeks. For Al Ansari, for Emirates MBD, they could be working on it for a year, 2 years.
Okay. So you brought up a good point about the $8,000 that's spent annually. That $8,000 obviously is not just covered on your credit card. The reason, and I'm speculating here, the reason why it's so high here is because no one's from here, right?
Yeah.
Nobody's been living here for 30, 40 years, so they leave every year. So naturally, you're going to get to that 8,000, and possibly through inflation, there'll be more later on. So in terms of your organization and what you're trying to do, it sounds like you're focused on the Gulf, you're starting with Dubai, and you want to move forward. I guess my question is that what next? You know, in the UK, people don't spend $8,000 a year on traveling, and that's because they live there.
Yeah.
So, you know, people invest in your company right now. You do great in the UAE. You probably want to expand to the rest of the GCC. But then, what is the company offering in 5 to 7 years? And you might not have an answer for that, but I'm just curious.
No, absolutely. So I think our setup as not being a licensed financial institution allows us to localize very quickly. If we have products that are relevant to different markets, we can deploy those in different markets at the rate at which we can onboard new partnerships, right? We don't have to go through the licensing process. We don't have to go through that complexity or localization build, whatever. So this is one thing. One of the things that's interesting specifically about the Gulf and what we're building is that the Gulf has, as you alluded to, a unique set of travel use cases and problem statements, right? That aren't faced in the same way in maybe the European markets where people are traveling, but it's not a significant expense for them because they're not traveling back and forth from wherever they're working often, right? So we think that also, interestingly, one of the products that we're bringing onto the roadmap is visa automation. So one of the industries in Dubai, so my fiance is Egyptian, and I'm from the UK. My passport allows me to very easily travel. I don't need a visa. I'm very fortunate in that sense. For my fiance, it's a different story. She has to apply months in advance to get a visa, and this is crazy. And there are people in Dubai that help us make this process, and our agents that will basically book you a visa appointment, try and speed this up. No one is offering a visa automation product in the UAE. So this is a very interesting, very real pain point that is very specific, really, to this region, right? That Revolut or some of those European fintechs have never even thought about. So we think that's where our edge is. That's what localization means. It means solving those specific pain points that present in this region and solving them fundamentally, not getting a white labeled off the shelf product, but really building technology that solves it.
Okay.
Last question, how you make money?
So
Sorry, it's a very blunt question, but
no, it's probably the most important money, the most important question. So we have three revenue streams. So we have a subscription model, firstly. So we have a freemium product. So anyone can download the application and be issued with a card for free. For FX, we have an allowance model. So free users are allowed $500 a month of free FX with the lower limits. At the weekend, we charge a fee similar to the Revolut model. And if you subscribe, you increase your limits to $10,000 a month. In addition to that, so that FX, according to our modeling, works out at an average of about 1% across all transactions. The interchange, we receive an interchange rebate from Ria Bank on international transactions of 15 bips, 0.15%. Now, this works because as a business, we keep very low headcounts. One of Revolut, for example's, or Revolut's most significant costs is headcounts. It's engineers, it's product managers, it's middle management, right? We don't have that. And yet we can deliver fully realized products without that. So we can bring our margins down to the wire, right? And still have successful, profitable products. And with this model, we're break even at around 8,000 users.
Right. I think your revenue model, of course, needs to be looked at further. Your overall concept is good. You are trying to build, in other words, like a super app. So, for example, you have forgotten to put your revenue stream from medical insurance, from FX you have already mentioned, but from the discounts, so from Booking.com merchants, how do you make money, right? So that's what you need to look at.
These are included. These are free. These are MasterCard Platinum Card perks. So we actually don't make any money on these.
You don't make money from them, right? So overall, I think it needs to be more fine-tuned. Sharia compliance needs to be looked at.
Sure.
There are products which you can bring. You're trying to do something different, definitely, but a little bit more fine-tuning is required, definitely. But good luck. I wish you all the best for that.
Thank you.
Just since we're giving some feedback, what I'm getting from all of this is that the product is not that card. The product is you and your team. So I would say that the product of you and your team is that card. But people are not investing in this. They're investing on that last slide. So I would position it very, very differently, because everything you're talking about is getting to market. We have the expertise. We know how to do it, and we can do it faster. So the actual investment is in you guys. That's just a byproduct of what that investment is.
Yeah.
Agrees?
Right. Thank you so much, Chris. That was a great presentation. And thank you for our panelists and their questions. Before I introduce the next founder, I just want to ask our panelists if we could keep it one question per panelist, just to make sure we keep on schedule. But it was very insightful. Thank you for your feedback. All right, next up, please join me in welcoming Tanvir Shah, founder of X Square.
Hi. Thank you very much. Good morning, everyone. It's a FinTech presentation, so the obvious first question, how many of you love your bank? No hands, as always. One guy, you're a banker probably. Why? So yeah, you love your employer. Let's put it that way. For most of us in the UAE, banking is troublesome. There are issues that most FinTechs are trying to solve. The problem is even starker for businesses. It's a fragmented, broken, messy, difficult, expensive experience running a business and banking in most markets, not just here. You have usually most businesses, unlike an individual retail customer, will have 3 to 4 bank accounts or 3 to 4 banking relationships. In each bank, you would have a couple currency accounts in countries like the UAE, which is a global trading hub. So you would have a USD account, a AED account, probably a Euro account. You might have a couple corporate cards, commercial cards as well. You'll have hundreds of customers, hundreds of suppliers, invoicing them, reconciliation, refunds, managing that whole ecosystem is an effort, especially the larger the organization. You might have 50 people, 100 people in finance just doing this on a weekly basis, monthly basis, quarterly basis. If the business owner or the CFO wants to take a business decision and asks his finance manager, what is the real time position on a Friday afternoon at 4 p.m. before markets close? It'll probably take half an hour to an hour for all that information to be consolidated on an Excel sheet, all the downloads, log into the 7, 8 different portals, get all that information, and then make a decision. What we've done is at X Square, we have brought all of that into one place. We're a B2B fintech platform. We're creating some sort of a B2B fintech super app where all these rails for payments, for receiving payments, for sending out payments, for invoicing, everything comes onto one single integrated dashboard. The problem that we're solving, the challenge that is there in the market is a broken, fragmented, slow, expensive process, which is really crippling businesses in the world and more so in our region. We've made that an integrated, consolidated, fast, cheap, single dashboard, single platform model where the businesses can make decision quicker and integrate all of their workflows, payments, capital management, recon in one place, and then potentially credit as well. So these are the number of B2B fintechs that are available in the world. In our market as well, you have a Pemo, a Pluto, uh, Alan, most of them doing corporate cards, expense management, spend management. We bring all of that into X Square. We won't have all of them, but in each segment, we would have a couple partners whose rails we would use. So we are the unregulated integrator bringing these regulated rails all onto one platform for businesses. Our lens is the customer, the businessman, the business owner, the finance manager, the CFO. How can we make his life easier and quicker? This is the live platform. We went live about 12 months back. It's an 18-month-old company. The business that we are in the fintech ecosystem is actually called a payment facilitator. So we are a payfac, we are an orchestration layer, an integrated platform. We are the infrastructure that brings all of these regulated rails into one place. We are mobile native as well. So if a business owner, like mentioned in the previous pitch, everyone keeps traveling, right? The wealthier you are, the multiple businesses you have. So business owner sitting in the UK wants to take a business decision, wants to approve a transaction, can do it right away. We have different user management as well. So you can have a creator, approver, oversight as well. You can have multiple businesses under one parent entity as well. So business owner, no matter where he is, can facilitate his payments, can get information, doesn't need to call the CFO, doesn't need the accountant, the account executive to give him information. All of it is done by X Square. So it just makes things cheaper and quicker for business decisions cross-border. The market we are looking at, B2B fintech, is about 20 times larger than B2C fintech. The last decade, most fintechs have done B2C fintech. They've integrated, they've done these sort of payment facilitator plays for B2C. B2B is just starting off. The wave is now. Now is the great opportunity. In the Middle East Africa region, it's a $10 trillion payment volume that we're targeting. In comparison, the global B2C payment volume is $8 trillion. The global B2B payment volume is about 160 to $200 trillion, depends on which report you read. So in our market, we've already launched the card payment services last year, second half of last year. We are now launching different payment rails. We are also aligning with the UAE's move to ANI, if you know, is a centralized sort of payment platform that the central bank is launching, and we are integrating with them. That should launch in Q4. So with that, we would have all the sort of integrated rails all in one place. We then want to go to Qatar and Kuwait. So MasterCard has introduced us to one of the largest banks in Qatar and the largest government port there to do this for all the shipping and logistics ecosystem players, and for them to be onboarded onto X Square, use our rails for that quick decision making and movement of monies. And then Saudi Arabia the year after next. The reason we're in this pitch, this is the first pitch that we're doing. We want to start talking to investors next month. The reason is that we can do all of this much quicker. So what we're raising is growth capital. Else we are profitable on our own. We're already revenue positive, and I'll share some of those information as we go along. Some of the people that have done this in other markets is Flex and Melio in the US. Melio got bought out last quarter by a New Zealand-based accounting fintech called Zero. Melio got sold for $2.5 billion on a $25 billion payment volume. Airwallex is out of Australia. They are doing $100 billion of payment volume annually and are valued at $6 billion. So in the Middle East Africa market, no one's doing what these guys have done in these markets. And we are doing much more than what they did. Like was said in the previous example, there are some learnings that we've taken from these players as well, saying for the Middle East, for the UAE, it's a global trade hub. How can we do it better? So we are adding some value-added services. So you could pay your Deva bill. You can pay your Deva bill. Our customers are paying their Deva bill, Seva bill. You can book your corporate flights, corporate travel, all on X Square, on payments as well. Big update at this moment is we are completely bootstrapped. We are live. We've generated $100,000 in top line revenue. We've processed almost 15 million dirhams in payments here in the UAE. And between me and my co-founder, we have about 40 years of banking, cards, and payments experience. With the team, we are 15 people. We have about 100 years of banking, cards, payments, fintech experience. So this is a real story. This is all live as we speak. We are one of the few startups that you'd see anywhere in the world that is bootstrapped and fully audited. So we have audited our accounts till December 2024. We have actuals as of last month, and we have projections up to 2027. If we just did the UAE and just did payments, we could still build a $3 billion payment volume, which would value the company at about $250 to $300 million. We can still then also do other markets. We can do other products. So in all of this, I'm not talking about credit. So if we have all the payment flows of buyers and suppliers, we can then start doing invoice discounting. We can do supply chain financing. We're not accounting for all of that at all. We're just saying if you do a payments business in these 4 markets, we can easily be a $300-400 million business over the next 2 to 3 years. And then there's huge other opportunities as we go along. So we're raising $500,000 at a $5 million valuation. We have MasterCard that has supported us. They've incentivized us to go across the different markets in the region. We are also the only player in the region that has the MasterCard business payment service provider license to allow card payment to non-card merchants. That's the reason they're taking us to Qatar, Kuwait, saying, hey, here's a platform that's unique in this region, and we can roll it out in the different markets. Because we are not regulated, we can also go very quick to different markets. We can go very quickly and integrate within 3 months into a bank, into a port facilitator, etc. Amazon has also backed us. So 2 Fortune 100 companies that are backing us. Amazon has given us about $175,000 in credit to use their AWS. And India Accelerator is the largest startup accelerator in India. They've backed us as well. So we use their office space here in Dubai. They're in partnership with Dubai SME. Uh, One of the sort of 6 key reasons as to why we believe we are the people to back is, again, we've shown revenues $100,000, positive margin, because most fintechs usually burn VC capital to get transactions. They lose money on every transaction that goes through. We are making 30 to 50 bips on every transaction that goes through. Up to 50 bips on cross-border or 30 bips on local transactions. We're not burning cash because we're bootstrapped. It's our own capital. We want to keep it that way. So no fancy, yoga studios in our office, no table tennis. You can take those gym memberships separately. We're keeping it lean, mean, simple. Want to serve the customer. Want to serve the economy.
Tanvir,
Yeah,
there's the 10-minute stop.
That's it. So that's our team. I'm a Harvard alum and instructor, and we're both bankers. We've done this many, many times over. Our team mostly outsourced, and we have demos that we can share as people are interested. Thank you very much.
I guess I'm starting off again. So thanks a lot for the pitch. Really appreciate it. Since it's one question, I just want to understand. So each space that you guys are playing in is pretty crowded, right?
Yeah.
So I'd love to understand, why has no one tried this aggregator play before? Specifically, what I'm trying to understand is, what have you guys realized that no one else has, and what makes you unique, right?
Yeah. So what this sector is relatively new, because that crowding of the B2B fintech space is also relatively new. Let me share. Yeah. So this is a recent post by Marcel van Oost on LinkedIn. This is payment facilitation. If you think of it just philosophically, without the tech piece, it's actually Uberization of payments. We are the Amazon for payments. We are the supermarket in the middle, where you can get all the manufactured products. They're regulated. They're selling their manufactured products. Some of our products are own brand as well. But this is relatively complicated. Sort of Uberization or Airbnb, where we don't own the hotel, but we become the largest hotel player in the world. We don't own the payment rail, but we can route payments based on what kind of a transaction someone is making. So someone in Qatar is making a payment to Kuwait. We can check which is the best rail. Should we use it through the MasterCard rails? Should we use Network International? Should we use the local payment gateway? This is relatively complicated. And you need those multiple players. So in the UAE, for example, you couldn't have done this 3-4 years back, because they weren't such a competitive landscape of B2B service providers. Now you have Alan, Pemo, Pecco, Pluto. So we can then integrate into 20 different spaces. Also, from a client perspective, from a customer, from a CFO, finance manager perspective, it wasn't messy enough. Now they have to open 8 different portals. He's on ENBD, ADCB, Mashreq Bank, HSBC, just because the boss called and said, "Hey, Friday afternoon, 2 o'clock, what's my current cash position on Mashreq? Can I pay supplier A through bank B?" I said, "No, I haven't added the supplier. Once I add a supplier, 24 hours of cooling period." So we sit in the middle, integrating this sort of broken, messy, fragmented ecosystem. So that ecosystem fragmentation has just happened recently. And building that sort of Airbnb or Uber of payments is relatively complicated. It needs industry professionals. That's the reason most techies that went into fintech said it was a personal problem. 22-year-old MIT grad said, "I went for a home loan. I had a horrible experience. Let me build a home loan app." People haven't had that experience in business till now. But now it's so fragmented, opening 10 portals. And that's why, so we've already got 100 merchants on our platform, done 15 million dirhams or so of transactions. The minute we talk to them, like, "Yeah, we were looking for this." If you can bring all these banks into one place, all these cards into one place, all these cross-border rails into one place, fantastic. I log in once, all my suppliers, all my customers. So I can pay any supplier, I can take money from any customer into any bank, into any card. That problem has just erupted now. And UAE is even more difficult, or the region, because it's a relatively small geography, a relatively small number of population. So large businesses here are cross-border. So we would be the first, potentially the first global B2B open banking, where you'll see your Qatar National Bank account and your ENBD account and your NCB account or Al Raji account, Saudi, in one place. You can credit and debit as you want from one place, one login. So this is happening as we speak. We are integrating Doha and Kuwait as we speak. Yeah.
Thank you very much. So how are you addressing the compliance? So regulatory hurdles, payment, accounting, compliance, and especially data security. So how you are addressing those challenges, considering you will be dealing with multiple jurisdictions?
So we are PCI DSS compliant, payment card industry data security standards. We're waiting for a final certificate this month. And we are onboarded by the regulated players. So Network International has done a deep dive assessment of our data standards. We have a director of operations, a director of compliance. We are both bankers. So I built Abu Dhabi Islamic Bank's cards and payments business from 2009 to 2016, from 0 to 1 million customers. In fact, the Al Ansari prepaid card, the multi-currency prepaid card, was launched by me in 2011. So we've done this. We're bankers, we're payment guys. So the first thing we said, maybe a large part of our initial capital went into this, being fully payment card industry data security standards compliant. That's the reason MasterCard is willing to write us a check, do a contract with us, introduce us to a bank in Doha. So we're very, very clean on this.
What about the regulators?
The regulators love it. So Network International is regulated by the central bank. We met Nebras, who's launching ANI. We met the central bank themselves. We're fully, once your PCI DSS is compliant, MasterCard and Visa have given you a green light. Network International has given you a green light. That's about it. That's all that's required for payments.
Thank you for your presentation. And I'm going to use my question to ask his question again.
Sure.
Because there's something that you haven't addressed, is that when you're aggregating all this data into one platform, right? In order for it to be compliant with your auditors in the Ministry of Finance,
Correct.
you can give them a report from X squared, right? They're going to say, for example, I need a bank confirmation from this account.
Yeah.
But you have so many things going everywhere that I understand it's a complete mess, because you want to have the ability to be agile and move around and use whatever vendors you want.
Yeah.
But I have a few companies, and just having two accounts is a complete disaster.
Yeah.
So and this has nothing to do with PCI whatsoever.
Yeah.
This is strictly operational. So how do you address the operational change and producing the reports on where your accounts are, what you've been doing, in order to be compliant, as Shar is saying, in regards to the compliance with the auditing and the Ministry of Finance?
So first, on the UAE Ministry of Finance has a 2 billion innovation fund called the Mohammed bin Rashid Innovation Fund. I sit on the investment committee. So I'm a MOF member in that some sense. Second is, once the ANI rails come in, so in India you have UPI, this payment stack. Which is ANI is modeled on that, so it's very similar. Once you have the ANI rails come in, you will need a member bank that you go through. So very similar to the previous startup, they've spoken to Ruya. We're speaking to two banks locally that I can't name. So we would have that bank. So as an example, and it's not this bank, but let's say if we were to go to Vio, friend is here, and Vio would be the central bank interface for us. All the transactions and ANI interface that we do, how we log into ANI, is through Vio. So Vio speaks on our behalf to ANI and to the central bank. There's no way that we could do this. So for our instruction, so if you have a business, let's say your bank account is with ENBD. Through X Square, if you're sending a message to ENBD, just to have that rail for ENBD to accept my message, I need to be regulated. Or I need to go through a member regulated bank. So I would go through VO, as in this example. So your transaction would come to X Square. X Square internally, that routing that I showed in the previous slide, that would route it to VO, saying here's the instruction coming from a accepted third-party fintech. VO would send it to ANI, saying please debit ENBD for 20,000 dirhams and credit it to ADCB for 20,000 dirhams. Tomorrow, if anyone asks a question to us, let's say a merchant says, hey, I moved 10,000 from ENBD to ADCB and it's lost. Fraud, chargeback, reversal. I would go to VO saying, hey, here's my reference number. I sent you this message on 17th of Jan. Here's the 17 base 1 file. So here's the base 1 file. please trace it with Ani and give me a response. They would trace it with Ani. They would give a response that ENBD did not process that file because of X, Y, and Z reason. That would come to YO. Y would give it to us. We would give it to the merchant. Absolutely, absolutely. So we are already in talks with two banks. So that's the regulated rails. So that's what we say when we regulated processes, not just the bank, just as the ecosystem. I don't want to take names, but you can do it with Network International. You can do it with Mercury. So Mercury is one of the large payment players here, not a bank, but Mercury is sort of building that ANI framework. We're in deep talks with Mercury on using their platform for multiple things. These are all B2B players. They have no interest in going to Mohammed bin Rashid tailoring in Bardubai. We are going to Mohammed bin Rashid tailoring in Bardubai. We are going to Ahmed Bakery in Dera. So we are that customer interface using a regulated rail. Could be Mercury, could be Network International, could be YO, could be ENBD, and not just here. We'd go to Doha and we go to a bank. And that's why MasterCard is saying, hey, bank, please talk to these guys because these guys are MasterCard approved. They are PCI DSS compliant. They're already regulated. They're 40 years of banking experience, cards and payments, done this. Yeah. Thanks.
Thank you so much, Tanvir. Thank you.
Thank you.
Next up, for our last founder, we have Usman Conde, the CEO of Worry. Please welcome him.
Hi, everybody. My name is Usman. I'm the CEO of Woody. Woody is a neobanking platform, and our motto is to bank the unbanked. So let me start with a few questions. How many of us know the term unbanked? How about underbanked? Okay. What about payment interoperability? Don't worry, at the end of this presentation, you know everything about the unbanked, the underbanked, and what payment interoperability means. I usually start my presentation by telling the story of Fatu, an unbanked person living in the southern west of the world who has to spend the whole day to pay for rent on time. But today, I have a better story for you. Story. So we are scattering globally. And 2 days ago, I was in Kenya. I had lost my credit cards and my debit cards. And I needed the plane ticket because my original plane ticket was also lost. And what happened is I ended up going to Qatar Airways. I'll tell you the story and then we see the video, okay? I ended up going to Qatar Airways. I had $2,000 with me, carrying cash around. Qatar Airways, I want to buy a plane ticket. They tell me, well, they can't accept cash. And I don't have any credit card with me. So what they did, they gave me a payment slip. I had to run to a bank, deposit the money at the bank, run back to Qatar Airways, one of the best airline companies in the world, give them the payment slip, and have them issue me a ticket. So this is the story. Oh, let's go back. All right. Here I'm showing around Kenya. This is me running to the bank, 2.3 miles away. Standard Bank was the only bank where I could make the deposit. They give me a blue slip. And then I take Boda Boda, which is a motorbike, driving around. It's a, you know, and this happened. I'll let you. What happened, you see, I had a flat tire. I had to find another one. And mind you, I had 45 minutes to do all of these. And I took another bike. Obviously, he's unbanked. He didn't know where to go. Luckily, I had Google Maps to give him the directions. Here we go. Qatar Airways, finally, 10 minutes before the deadline. And this is how I paid him. I used his phone number. Just put his phone number. Remember, he's in bank. He doesn't have a bank account or credit card. So I'm paying him through his phone number. Now I'm at Qatar Airways and they gave him my payment, my receipt, and here I am today pitching to you guys. So what's the problem? About half of the world planet, nearly 2.7 billion people, are unbanked. And because of that, businesses struggle to get paid by unbanked. And this is because a broken financial infrastructure is still forcing nearly half of the world's planet to carry cash around. So why are people unbanked? Well, there's an infrastructure problem, and some of them don't trust the financial systems. And in areas where even people have bank accounts, it's extremely hard to access your money. In fact, sometimes you need to wait 2, 3 days to be able to withdraw your money at the bank. Now, how do we solve this problem? Well, we could have an app and sell it to every unbanked person on the planet. We did something different. We went to the merchants. So we are a neo-banking platform that enable every store and shops to become a mini bank. And by doing that, they are a lifeline for the community. They enable people to send money anywhere around the world, to pay and get paid, using the phone number as a payment method. Now, this is a little bit about the technology, the Wadi infrastructure, which is patent pending, but it doesn't really serve us justice, right? Here it's very simple. The merchant has a POS system or an app, and anybody can go to the merchant, pay. They don't need to know who we are. They want to send money to the parents in India or in Japan, or they want to pay for goods and service in Dubai, no problem. They give either the phone number or the bank account or the debit card, and in matter of seconds, the funds are disbursed. Again, this is near real-time cross-border transactions. But I want to talk about this slide. When I was pitching to Visa, 5 minutes in, I came to this slide. We start talking about unbanked, underbanked, KYC, biometric verification, payment interoperability, which means that here we connect mobile money accounts, people with phone numbers that don't have bank accounts, and also people with bank accounts, credit card, and debit cards, so that they can all seamlessly interoperate. It took me 5 minutes to convince Visa to invest many millions of dollars into the business. That was the fastest pitch I ever did. Now, we believe that your life should be defined by your own dreams, your own talents, and your own aspirations. And today it's not the case. And that's what keeps us up at night. Now, Woody is not an app, even though you can have it through an app. Here I'm just showing you how it looks like in an app environment. Woody is an infrastructure, interoperability infrastructure. So here we are. So here I'm using a phone number to send money. We have real-time currency exchange. You put the information behind the scene. You have KYC, biometric verification, sanctions list screening, OFAC, Interpol, FBI, DEA, and so on and so forth. All that happens seamlessly. And in a matter of seconds, the recipients get the funds. It works online and offline. You don't need internet to, to send or receive money. And eventually, we also have ability to create Visa cards for the end users, as well as a AI financial advisors that is able to automatically generate all kinds of reports. So this is the app, and this is the Wadi POS. Now, I think I can skip through this pretty quickly. We are scaling rapidly. Last week, we raised $500,000 to open in Gambia, a small country in West Africa. And next week, the country will be operational. Same thing with Senegal and so on and so forth. Now, how we make money is through partnership with Visa, interchange fees, and the foreign exchange rate that we add a certain spread to it. We also have merchant business options where we give them white label solutions. For example, in Senegal, we are providing this solution to the government, housing authority, and also for retirement companies. I really, I know I'm pretty much running out of time, but I want to take a quick pause here. What really keeps us on night is to enable people to live their life based on their own dreams, talents, and aspirations. And when an employee calls us on the 31st and asks us why we send them money on their phone number, that is our proudest moment. Because without us, they would wait 2 months in order to receive the salary. Okay, so this is based on our value theory market capitalizing, and in the world of finance, given what we have today, we could process $2.2 billion per day. It's obviously a very big market, as usual. This is a little bit about why us and why now. We built the world's first global interoperability technology, and that's one of the reasons why the best companies in the world are backing us up. It's a complete and top market, $3.7 trillion that no one touches today. Now, this is our extended team. As you can see, we have our corporate backers, Visa, Microsoft, and NVIDIA Inception, as well as Payment Cloud. Now, the real competition here is cash. That is, in a world where we do not exist, you can basically do everything with cash, but carrying cash around is very dangerous, as we all know. A little bit about our current traction. I want to keep this line. Our goal is to process $1 million a day in total payment volume. And we know that we can clearly achieve this goal with the large number of merchants and users that we already have. We're currently raising $6 million Series A. $4.7 million are already secured. And seeking a lead investor to close this round. By doing that, we will be able to process around $357 million per year. So with that, I want to give it back to you and see if you have any question. But I want to leave you with one thing. Wadi is not just about banking the unbanked or giving opportunities to people. We envision a world where a taxi driver who never learned how to read or write would be able to have insurance, life insurance for his family, a medical insurances, would be able to purchase the plane ticket without having to require a bank account or a credit card. That's the vision that we envision for Wadi. Thank you, guys.
Thanks, Osman. I appreciate it. So first, I'd like to ask, how many merchants, points of service are you going to have to acquire, to kind of hit your target market sizes, and how much is that going to cost you?
Wonderful question. So today we have about 10,000 merchants registered on our platform. The way we enter the market is through partnership. So we don't go to each merchant individually, even though we're starting to do that now in the US. What we do is we go to consortium of merchants and we sign with the consortium of merchants. We give them things that Western Union, RIA, MoneyGram do not get them. They get around 20 to 40% of the margin that we make on a transaction. I think to this day, we had only one merchant that has said no to our solution, and that is for some security issues that they have with other vendors in the ecosystem, and they didn't want to, just try a new thing.
Awesome. And just one quick question. The 4.7 million that's been secured thus far, does that include the grant from Visa or not?
Yeah, it's a non-dilutive grant that we got from Visa exclusivity with it, and it's spanned through a 5-year time period.
Okay, great. Thank you.
Thank you, Usman. Very interesting.
Thank you.
So you have mentioned, of course, your distributors would be shopkeepers
Yes.
predominantly, right?
Yes.
So one, how do you incentivize those shopkeepers? With regards to the KYC and compliance, how that would happen,
Wonderful.
and what safeguards do you have to ensure reliability of those shopkeepers?
Yeah, that's the core of our business. Building a interoperable payment technology that works globally and enables merchants under 5 minutes to sign up. So the merchants, like I said, we go through consortium of merchants, but they don't need to know what KYC means. I mean, people know what KYC is or KYB, AML. They don't need to know any of this. The technology, Woody technology, which is 60% driven by AI, handles all of that. We have biometric verifications, real-time ID verifications, and as I mentioned previously, OFAC, SDA, uh, AML, and all these. All that is embedded in the technology so that when you're doing a transaction, it works seamlessly as a merchant and even as an end user. We also have our own proprietary AI verification system behind the scene that use about 260 different data points that because we are in a market where people don't have social security numbers. Some people don't even have valid IDs, or their IDs are written in letters, right? So we can just rely on the standard because that standard is broken. So we have to build our own. And by building our own, anybody can send and receive money securely through our platform. And that's why we are live in the United States, in all 50 states. You know what that means? And in many different countries around the world. We're scaling rapidly in Africa at this moment.
Thank you.
So obviously, what you're doing is you're leveraging your relationship with Visa to expand into the market, correct?
Yes and no.
Oh,
There are,
let me finish the question, and then I'll come back to you. My question is that whether you're using them or not, who is it to say that anyone can make that relationship and do what you're doing? So are you exclusive in regards to working with Visa? Can I come and follow the same path that you've taken and build the same product and go to market with the way that you're going to the market?
yeah, you can do it, but the real key is what are you going to sell to the market, right? Um, my grandmother never spoke, never learned how to read and write. You have to know how to sell her the product, and that's what we did. The partnership with Visa is through Visa Direct, which is a technology that Visa implemented to send money in real time around the world. So this works only for people that already are part of the global financial market. That's half of the problem. The other 2.7 billion people, they only have phones. They even have touch phones. So the touch phone is still the most widely used device in the world, by the way. They don't know what Visa is. You can use MasterCard. That's why we built our own interoperability switch, enabling them to, in real time, send and receive money anywhere. But that's not all right. They need to enroll on Netflix, buy things on Amazon, order Uber. Uber doesn't know what M-Pesa is or Orange Money. So what we did is, with a partnership with Visa, we link the mobile money account to a Visa card that they can order in matter of seconds on the app at a very small cost. And that's how we solve the problem in partnership with Visa.
Thank you so much,
Thank
Usman.
you, guys.
All right, the most exciting part has come where our investors and panelists will take a side to deliberate on the winner for the best pitch for today. I would like to ask for the audience to remain seated and the investors to join me on the side for 2 minutes of deliberation to choose the winner for today.
All right, everybody. So are we ready? Yeah. So it's very difficult. It's very difficult for us to decide. All three of the participants, they were amazing, without a doubt. And for us, of course, we have to choose one. Um, and the decision is being made. It's not because one is good, one is not. All of you are perfect, but decision has been made for more strategic, and especially the entrepreneur or the startup who've showed the resilience and uh, how should we put it? Tick all the boxes, right? And the winner is, any guesses? Any guesses? All right, the winner is Cinder.
Congratulations, Chris. If you could join us with Jasmina from Bring.io for a picture, and the audience just remain seated, I'll give some announcement at the very end. Congratulations again. I would like to ask for one more picture, but with all three investors as well, if that works. And all the founders as well. Yes, for one picture. All right, thank you so much, and congratulations again for our best pitch. Okay. All right. I will be giving a couple few announcements. Thank you so much for the startups and our panelists. You guys did amazing. For upcoming announcements at Ignite, we have challenges. I don't know if you're familiar, but Ignite challenges are a way for startups to compete for prize money. We have one coming up in AI in public services, financial inclusion challenge, and AI landing page creation. We are awarding $10,000 to the winner of each challenge with a total of 30,000 USD with many more challenges to come. Yesterday we had the award for the Do Challenge, and it was an amazing event. If you are a startup and you have a bright idea, make sure to check on the Ignite platform. And thank you so much for being here today. We're moving on to the networking section. We have some snacks, and thank you.